Hi, I'm Trevor Austin, founder of Authentic Life Financial Planning. In this video, we're covering the stock option life cycle. I'm going to leave this screen up so you can kind of see what the life cycle of the stock option is, and I will walk through that in just a little bit here. But I do want to talk through how I kind of think about options and how I kind of think about them to help make the concept a little bit easier. So I want you to imagine that you have a manufacturer's coupon, and specifically one of those like books that people would sell in the like 90s and 2000s, where you paid some money and you got a book full of coupons, and those coupons allowed you to pay for an activity or food, clothes, whatever it ended up being. It allowed you to pay for something at a much lower price than what the manufacturer was selling for, what the store is selling it for. So I want you to imagine that you have that book. You didn't pay for the book, but you have a coupon from that book, and you are going to go to the store and buy a frozen pizza. Now, with that coupon from that book, you get to pay $5 for that frozen pizza, but the grocery store is charging $10 for that frozen pizza. And with that coupon, you can go to the store, you can buy your pizza for $5, and if you didn't have that coupon, you would be paying $10. That's a pretty good deal, right? $5 off something that costs $10. That's a great deal. Now, because you use the coupon from that book company gets a cut of the difference, right? And you actually pay that to the book company. Now, in reality, that's not how something like that works, but for our purposes, we're going to say that's how it works. So because you have this book with coupons in it, you get to pay the price the coupon says instead of the price everybody else pays. But because the book is helping you get a benefit, right? You're paying much less for the frozen pizza than you would if you didn't have the book. That coupon company is going to take a cut of it. Now, that's essentially how stock options work, where you get a coupon, the award basically, that says instead of paying what the market says our stock is worth, you're going to pay this exercise price. And the federal government and state governments essentially say, that's great that you get that, but because you get a discount on that stock purchase, we're going to charge you for that. We're going to include that in your taxable income. And so stock options essentially allow you to purchase your company stock at a much lower price than what you would be paying on the market. And the benefit of that is that, the value could end up being much higher than what you get to pay, and you get to basically just take that difference minus any taxes that are owed. And so we'll talk through about more why that can be such a big benefit in just a little bit here. But I do want to walk through the life cycle of stock options, just so that we're, again, all on the same page of what they are. So there's 4 phases to the life cycle of a stock option. The first phase is the grant. So your employer grants the stock to you. Essentially, nothing really has happened. The stock isn't yours yet. You haven't exercised it yet. You don't own it in any shape or way. No taxes are owed at that point. But you get to start understanding what the stock option does, what it kind of means to you. You get the equity plan, it may be called the long-term incentive plan. You get the actual grant award letter that has the vesting schedule and the exercise price. Basically, you get all the details, but really nothing has happened yet. The next step is the shares vest. So now you have the ability to exercise the option. Doesn't mean you have to, doesn't mean you need to, but you at least have the ability to now exercise that option. Again, from a tax perspective, nothing has really happened. The value of the shares is not included in your taxes yet. The first time taxes really are going to be owed or potentially going to be owed is when you exercise, which is the third step. So eventually you exercise the options, you receive ownership of the shares, And that bargain element, just that difference between the fair market value and the exercise price, is included in your tax calculation for the year. The final phase, final piece of the life cycle of stock options is eventually you do sell. And so at that time, you receive the cash proceeds after any transaction costs and any taxes owed. Now, multiple of these stages of the life cycle can happen around the same time or at the same time. Certainly they don't have to, but they could. So it may, and they may actually end up being kind of out of order. But in general, that's the 4 phases. They generally follow that process of grant, vest, exercise, and sale. Thanks for watching. If you found this video helpful, please like, subscribe, and drop a comment below with any questions or topics that you would like to see covered. Financial planning is all about creating the life you want. Let's build it together.